starting. All attendees are in listen-only mode.
Welcome to the webinar. Ron here at AbleTrend. Take a look at the signals, and pretty wild day today. Well, pretty much one way down all day. And I'll show you a couple things. But one thing I want to mention is that there's different trading styles you could use AbleTrend for. It's not just one thing only. Like, well, it only works with a 1 minute, 3 minute day trading chart. Or it only works for long-term stocks. It doesn't matter. It depends on whatever you like to do. AbleTrend is very adaptable to different trading styles. I'll show you scalping. We'll take a look at the normal 1 minute, 3 minute combination. You could even use a 3 minute, 9 minute, which was outstanding today. In fact, it's been outstanding for a couple of weeks. But you'll have bigger risk, of course, because the higher the time frame, the further your stops will be. But when you win more. So, and it keeps you in the trends longer. So it just depends on whatever you like. There's no like one way only to use AbleTrend. It fits many different trading styles. Everybody's comfortable with something different than the next person. Everybody has different risk tolerance that they like or they don't like, or they can handle drawdowns or they don't, or some people can only be in front of the computer for a short amount of time. That's fine. You just scalp the market then. If you can only be in there for an hour or two, I'll show you, like I've been talking the last few weeks about scalping, when the prices hit the dots. That's a great way to scalp. Just look for quick trades, kind of in and out fast. So again, the software will adapt to whatever style you like. There's many different ways to use the software. That's my point. So let's take a look at the S&P today, which was pretty much a bloodbath all day today. It just went straight down pretty much the whole day. Not sure anybody saw that coming. However, that's why you got to keep your stops in there. For example, we had the nice buy signal about a month ago with the blue bar and the blue cross. This is the daily 130-minute daily combination. Really good chart for swing trading. It's my favorite for swing trading. If you like to be in the trade for a week or so, could be 2 weeks. This one actually was about 3 weeks because it never went under the blue dots. And when I say never went under, it never closed under the blue dot. But as far as stops, I got to be honest. I was putting or suggesting, and myself included, was going all the way down to here on the stops, the daily chart, the X's. Why? Because it was in such a strong uptrend for the last couple of months. So being it was such a strong uptrend, and every time it would hit the dots, bounced off, it would go higher. But technically speaking, the second lower row of blue dots is where we put the stop loss, which would have been stopped out right at the open today, and that would have been a good place to get out at 312 because it all went down all the way down to 300. So that's why you got to put those stops in place. Now it's fine if you don't want to and you're in front of the computer all day long. I mean, that's okay. But especially if you're not near your computer, you've got to have a stop in place. Now, regarding the short-term trading, and I'll show you the mini NASDAQ chart, but my point was when you're in such a strong uptrend, like we've been the past couple of months, not including today, of course, every time, you can see on the chart, it's kind of obvious, every time it would hit the blue dot, which is hidden support, that the software can tell us about. It tells us where this invisible support is, so it's clearly really important. Ninus, yeah, we have. Well, he probably can't hear me. He's asking, is there audio? Yeah, of course. I wish you could hear me, but obviously it's something with your computer. So my point is, on pullbacks, if you missed the beginning of the trend, especially when you're in like the last few weeks, we're in such a strong uptrend, the point I'm making is another style, get into pullbacks at the dots, regardless of the color of the bars, because everything else is in such a strong uptrend. You have the daily, you have the weekly, you have everything in such a strong uptrend. Pullbacks would have been great, even over here. Now, you always want to get in, as I talk about sweet spots, you always want to get in on the first couple of pullbacks. I mean, this trend was going on for 3 weeks. Technically speaking, yeah, that pullback, and that would have been a losing trade because we had been stopped out today. But after 3 weeks, well, those pullbacks, I mean, the market's not going to go straight up forever. So the point I'm trying to make is, you want to try and get in on those first few pullbacks when the prices come right to support. It's just amazing how accurate these dots are. I mean, we put that blue dot in there, 4 bars before that even happened, a day before we started that row of support there. So those are great places to enter. The same way when you're short, when the prices go up to the red dots, same thing. So pretty cool stuff. And I just want to show that my point is there's different styles. You don't have to just sit in front of the computer all day long if you want to day trade. You can do it however you want. Some people like to do more of a swing trade, which is excellent for option trading. But over here now, the trend is like a month old. I mean, there's a pullback there, and technically speaking, that's where it's perfectly valid to get in at that point. But I mean, it just can't go up forever. After a while, they get tired. Generally, this chart is for a week or two, a couple of days to 2 days to 2 weeks. At this point here, you are almost 4 weeks. In between the black line is a day, and this is a trading day. So you got 5, 10, 15, 20 trading days is a month. So this is 1 month. Now, this is, a week and a half in from the beginning of the trend, which is right there. That's okay. Take these pullbacks. That's fine. Everything's going good. But like now you're a month into a 2-hour trend. It's pushing it to get in there. In other words, if you didn't get in by, like, say, over here, 2 weeks into the trend, let it go. Move on to something else. And this is the S&P 500. I just picked this because it's the whole market. So, it's a great, I always like to look at this one every day because basically most stocks are going to follow what happens with the S&P 500. This is considered the market, the SPY. Drew, yeah, I've been working on some things, and I just wish I had something that I was happy about consistently. I come up with a few little things additional indicators that, would help. On some days it looked great, and other days really was no big advantage. And I hate to clog up a chart with something that doesn't give us a big advantage. So still in the testing phase. This is a 130-minute daily chart, Michael. 130 daily. You can see it all the way on the top of the chart here. SPY 130/daily. So this is a 2-hour chart. These price bars come in every 2 hours. It's 130 minutes, just a little over 2 hours. And the big crosses are daily. That's why it's right at the start of the day, right on the black line, right? Every one of them on the black, and then the red dot, of course, came in today. So anybody who likes to trade options or shorts the market, obviously you had a perfect signal at the start, 2 hours into the market today, because it was below the blue support points. That's the key. You've had the red cross, you had the red dot, you had the red bar, and you're under the blue support point here, which are these daily crosses right there. Clearly, when the bar closes, which is right there, it was way under the blue cross. So we would enter short or buy puts at the open right there, at the open of the next bar, which at that point right here is 308. You take that into the close at 300, and you just killed them today. I mean, it was an unbelievable day to be short, and all the indicators today in AbleTrend were short. You're welcome, Deborah. she's saying thank you for the webinar. You're welcome. Edmund, the NASDAQ was on super fast steroids. Exactly. Good point. And this is, and I wanted to, I'm glad you said that because I wanted to recommend an E-mini contract, a futures contract, and I recommend the Russell. I've been watching the Russell and really liking what I'm seeing. S&P mini is fine also. Like a day like today, I mean, everything was great using AbleTrend signal because it just, was a great day. It was short pretty much all day today. So, all the signals were great on a day like today. But it was a fairly easy day. I mean, trading is never easy. I should say it was a very strong downtrend, which basically stayed short, most of the day. Of course, there's going to be losing trades, and we had some today too. But the winning trades far outweighed, a couple of smaller losing trades. I really like the NQ. And by the way, Edmund, getting back to your question, because the NAS was on steroids. It moved very fast. Again, that's not for everybody. That has to do with trading style. Some people say, nah, it's too fast. Great. AbleTrend, that's not the only market to trade. AbleTrend is going to work just as accurate, just as well. I like RTY. Would that be my next choice? And then ES. ES has been really all week too. So those move a little slower. You might, what? I like these better. Great, just trade those. It's fine. Just trade those. It'll be perfectly fine. I like the Russell. That's another one. I mean, I really like the Russell. And another good thing about the Russell, you don't need to have as much on margin. If you had smaller accounts, the Russell is half the margin of the NASDAQ. Some people who have smaller accounts, you can't trade NQ because of the margin requirements because it moves so fast. So I would suggest the Russell, which has less than half the margin requirement, and every broker is different, so you'd have to check with your broker. The Russell index has half the margin requirement for those who have smaller accounts. Just trade the Russell. So here's NQ today. Actually, it was a losing trade right at the open because technically speaking, and sometimes a day like today. By the way, look at the 15-minute chart here. Look at the 15-minute chart. The 15-minute chart was on a short signal all night long, technically from yesterday. This is overnight, okay? All night long, you had nothing but red dots. Look, every time the prices hit the red dots, it would just bounce right off of it and go lower. Again, over here, right at the open, bounced off and it went lower. That's why this buy signal didn't work out, because it went right into resistance on the 15-minute chart. I find the 15-minute chart, just a straight 15-minute chart, no guidance, no anything, just a straight 15-minute chart with NQ. I've been watching this for a good month now, and I really find that it's very smooth. It gives, now, that doesn't mean you can go long because the 15-minute is short, but I wouldn't go long if your buy signal comes in right at the red dots on the 15-minute chart. Well, that makes sense. You're running right into resistance. And the 15-minute chart tends to be very strong resistance. Meaning, my point is, the blue and red dots on the 15-minute chart is like steel. It's really difficult for the prices to break above the red dots or to go under the blue dots when you have them on the 15-minute chart. And that goes the same for the Russell, the S&P mini, any whatever, really whatever E-mini market you like to trade. It's extremely accurate for the futures market. If you like YM, whatever, it's extremely accurate for the E-minis, the 15-minute chart. Just gives some good overall direction. I like to look at that, especially like what did overnight look like. Sometimes it'll give a little bit of a clue, what's going to happen into the when the market opens at 9:30 Eastern, 6:30 Pacific. Now today on the NQ, I mean, if you're a very disciplined trader and you're serious about your trading, it just doesn't get any better than today because the signals were nothing short of fantastic today. Again, you can trade anything you like. Anybody could do anything they like. Use any indicators you like. Anybody could do anything they want with their money. But if you're using AbleTrend signals, not your emotions, not your feelings, not other indicators, if you were using AbleTrend today, it was one of the best days you could even dream of having. Right there, right there, you've got just a textbook perfect triple confirmation sell signal. There's your 2 green bars, and we're stopped out a couple minutes later. Now, first trade of the day, we made 12. We'll call it 10 points. So I would like to factor in for slippage emissions too. Going to go long right here. There's a triple confirmation buy signal. Blue bar, blue dot. I added the 2-minute to the chart. I didn't want to clutter it up, especially in the Tuesday webinars. But yes, I've added to put the 2-minute back on. Just a lot of people were getting a little confused, so I took it off. But I got to tell you, I like the 2-minute. I want that there because it does keep you out of an occasional losing trade that does filter it out. So I just added the 2-minute chart. And there's your triple confirmation buy signal. There's your two green bars. We put the stop 2 points below the bottom of the 2 greens, and right there we're stopped out. We picked up 15 points on that trade. So we've got 10 and 15. Not even it's not even 40 minutes old. We've got 25 points profit. Michael Z says he's glad I put the 2-minute back on. Obviously a no trade zone there. Losing trade right here. Buy signal, blue bars, blue dots, blue everything. This stop here would be like 30 points away. So I always want to put it below the blue dots, but when it's 30 points away, you just can't do that. Not even 20 points away, you can't. So you put it just 2 points or point to 2 below the bottom of the first blue bar, and we're stopped out there. We lost 15 points on that trade. There's your sell signal. When you're looking at the chart, okay, you're looking at here, okay, I got stopped out. Now I'm looking for either a sweet spot, which is another blue bar, or a reversal, a red bar with a red dot and a red crosses. Okay, there's the red bar, got the 1-minute sell signal. Now I want to see a 3-minute, the big X. Okay, there's the 2-minute, but we still got the 3-minute. We still got the blue X, so no trade yet. Looking for that big red X. When I'm watching this live, that's what you're looking for. This could be the E-mini S&P, could be the Russell, it could be Apple, it could be the British pound, it could be a 3-minute, 9-minute, it could be any chart you're looking at. It's the same rules, same colors and same dots. Okay, now we're getting, I like that the prices are now going below the blue X's, which is 3-minute support. There we go. There it is. Wait for that bar to finish. The open of the next bar, we're going to go short. We've got a 2-minute sell signal, the little X. We've got a 3-minute sell signal, the big X. We've got a 1-minute sell signal, the 1-minute dot. We've got a red bar. That's a sell signal. We've got everything sell. So the open of this bar, right around 99.25, we're going to go short. Now let's see what happens. Stop. Ideally, I want to put that stop a little bit above that red dot, but it's 20 points away, 25 points away. So we've got the stop on the top of the red. So let's see how we did. Ooh, looking good, looking good. Now we always go to the stop on the second red dot. Now I can move my stop a little closer to the price. Not the first red dot above the price, second one. Okay, we're looking at this live now. It's the same thing as looking at it live because we don't take the trades until the bars close anyhow. So this is exactly what you see when you're looking at it live. It's going lower. Now I've got my stop here. Lose on the trade because I've just locked in 10 points. It's going lower. It's going lower. It's just, and you had to figure it was going to go lower. Why? Because look at the 15-minute chart up here. It's been short since yesterday. It never went, the prices never went above the red dots. How about the 3-minute, 9-minute? It's another great chart to look at just to give you a little direction. Well, the 3-9 is also short. Red bars, red dots, red X's. The 3-minute is short, the 9-minute is short, the 1-minute, the 2-minute, the 3-minute, the 15-minute. Does it get any better than that? I mean, you have just a pile of odds in your favor. The software is just screaming at us to get short. Okay, we're still short. The bars are red. Not even thinking about getting out on a red bar. That's ridiculous. Waiting for green bars. Ah, there's one green. If I get another one, I'm going to move that stop up. There's 2 green bars. So now the stop, which was here at that point, by the way, we were 30 points in profit. That's $600 for every 1 contract you trade. Now I'm going to move it much closer because I'm, just up a bunch of money right here. I mean, we're up $700-800 on this trade in 20 minutes. Now, again, I'm looking at this same thing as looking at it live. I'm just going faster. Just not waiting 1 minute. I'm clicking every couple seconds. Push stop 98.90 right there. Let's see if we get stopped out. At this point, I'm a 40-point winner. Got 800 in the bank. Stop out right there. Okay, it's 40 points. We were up like 20 going into this one. Now we're up 60. I don't know what more anybody could ask for. I mean, being realistic, we'd like to have a magic, a magic machine that never loses, but that's impossible. I don't know what more, how you could make it how I could make it any clearer than getting in on that signal right there. Now, you don't know if that's going to be a winner or loser at that time. Of course not. But you got to take the trades because nobody in the world can see the future. And of course, we were stopped out. Now, at this time, I'm checking for sweet spot. I'm going to check the tick chart. If the tick chart is also red, especially with a red and a red X, I'm going to go short again. I've got a red bar. I've got a red 1 minute. I've got a red bar. I've got a red 2 minute. I've got a red 3 minute. I've got a red 15 minute. I've got a red 3-minute, 9-minute, which is right here. It's still red. Everything is red. Everything is red. Well, let's just check the tick. Just want to make sure that my 200, 400 tick also likes this trade. So let me refresh that. That's weird. Just give that a second. It has to refresh. That was at 11:10 Eastern. Tick came in at 11:14 or so. So a couple bars lit right there. That's 13. 14 right there. There's 11:14 Eastern. Right there. Tick agreed. Let's see what happens. Stop out. Stop out. So we lost 10 points on that trade. We won 40 on the one before. Now, let's see if we're going to go long. Not even thinking about it. In fact, you've got another triple confirmation. Short trade, and this was just a mega home run. And if you missed it, you had some sweet spots in there you could have gotten in. Tick chart agreement comes in a little after 12 o'clock. That's about in there because these are sweet spots. It came right back to red dots. This goes into what I was saying earlier about different trading styles. By the way, look how this one worked out. Stop goes a little bit above. There's the 2 greens. There's 2 more greens. Stop goes lower. Stop out there. So we're in over here at 98.40, and we're stopped out here at about 9,800. Another 40-point winner. I don't know how much clearer we could make it. I don't know what more anybody could realistically be asking for. But getting back to the different trading styles that I started with, every time the prices hit the dots, those are, if you're looking for a quick in and out, couple points, and you use the ES too, or the Russell, they're a little slower charts. By all means, use the Russell and the ES if you find the NQ too quick. That's fine. It's nothing. That's perfectly fine to do that. They work just as well. The NQ tends to be in these big, long trends, but not everybody has the makeup to stay in the trends and to handle the volatility. Because you can't look at your account because I have to switch. You can't look at it. I don't look at it because you see up 200, down 100, up 300, down 200, like in minutes. You go crazy. You jump out the window. It'll make you nuts. You can't look at it. I'll look at the chart. You can always overlap. If you use infinity, you could always overlap your infinity dome on the left side of the chart because you're only looking at the right side of the chart, which is when the signals come in. So you can always overlap. So this way you're really close. That's why we always get in and out at market. And then everybody knows what happened the rest of the day. I mean, it was just a mess sell-off. It was just unbelievable. I mean, look at this triple confirmation winning trade there. I mean, short at 96.90, stop out here at 96.50. Another 40 points. It was just 40 points here, 30 points here, 20 points there, 30 points there. It was just unbelievable. Again, for a disciplined, serious trader. Now, you say, well, I'm only in front of a computer an hour or two. I don't want to sit in front of it all day. Great, no problem. Just take the pullbacks back to the dots. Use any chart you want. Look at this chart when it hit the dots there. You had 3 hits there. It hit the dot. Doesn't matter what color bar it is. It's fantastic if it's red, but it's probably not going to be red when that happens. You got once there, it hits the red dot. Use a 3.9, use a 1.3. It doesn't matter. Anytime it hits the dot, that's a quick trade. Winner there, winner there, winner there, winner there. 4 winners in a row. If you just look, 2, 3, 5 point, whatever, that's up to you. You're just scalping for a few points. Nothing wrong with that. Look at all. I mean, it was just winners here. Right there. Hit the red dot, went lower, winner. Hit the red dot, went lower, winner. Hit the red dot, went a point or two above. Remember, the stop goes to the previous higher small red dot. Never hit it. Turned around a minute later, went down, winner. Hit the red dot there, went down 50 points. Big winner. I mean, that's how you use the software. If you like whatever style you like to trade. I showed you a swing trading stock chart. That 130-minute daily is only for stocks, U.S. stocks only, not futures. That's for swing trading stocks. How about you want to use the 15-minute chart? It doesn't matter. Pick any chart you want. When the prices pull back to the red dots, that's when you want to go for a scalp, quick trade. Hit the red dot, went lower, winner. Again there, winner. Again there, winner. You want to wait for the prices to hit the red dot. And you can even put a limit order right on the dot. So this way, if it hits it, we're in. Just got to be patient, wait for that to happen. But my point is, you could use AbleTrend for scalping. You could use it for day trading. You could use the 1 minute, 3 minute. You say, I don't like to make too many trades. I'm just great. Use the 3 minute, 9 minute. You can have big stops. So when you lose, you're going to have bigger losers, but you'll have much bigger winners when you win. You say, well, I trade stocks and I'm an option trader. I don't like to day trade. I'm not from, I'm use the 130 daily. Well, I'm a longer term trader. I'm looking at my retirement accounts and all, and I can't be in front of the computer at all. I'm working all day. Hey, that's not more important. You work, that's for sure. Use a daily, weekly chart. That'll keep you engaged for months, weeks or months. Again, you'll have your stops will be further away, but when you win, you'll win more. It's all relative. The higher the time frame, the further away your stops, but the bigger your winners are on the winning trades and less trades. It doesn't matter. AbleTrend will fit your style no matter what your trading style is, no matter what you're most comfortable with. Because everybody's different. But no two people are made up the same, that's for sure. Everybody has different likes and dislikes and different risk tolerance. Some people can't stand making a lot of trades. They don't want to go in it. Some have no problem at all if it goes up or down. As long as they're under the red dots, they stay short. And as long as it's above the blue dots, they stay long. Not everybody like that. Some people can handle drawdowns. Doesn't mean a thing to them. Others, it freaks them out. So it's the same. Just depends on whatever you want. My point is, that's how you use AbleTrend for 4 different styles. So I'm going to go through the trend questions real quick. Um, 15-minute chart, Michael H. And what is the second time frame? Like I said, it's just a straight 15-minute chart only. Over here is the 3-minute, 9-minute. It shows it right in the top left corner of the chart. And of course, this is your 1, 2, 3 chart. John says, how do you decide whether to use a stop at the dots or the 2 green bar? John, you only use the 2 green bar when you're more than 10 points in profit on NQ. If you use an ES, you would use it more than 2 points profit. If you're using it on RTY, 2 points profit. You have to make profit 2 points if you get stopped out. $100. That's what we use. That's what I suggest. You can do anything you like, but you do not use the 2 green bars. Watched any of the previous webinars, feel free to do so. They're all on YouTube. This webinar will be on YouTube tomorrow. I always say you gotta be at least 2 points profit to use the 2 green bars. Otherwise, we use the second higher row of small dots. You cannot get a tick chart in TD data, John. Steve got stopped at an 11:33 trade, 2 over the starting bar. Yes, sir, but just re-enter on a sweet spot. Michael H, is the stop loss normally 20, 25 points away? Could be, not normally, but could be. Could be. I mean, there was no stop outs today, that's for sure. Almost never went above the red dots. As I showed you, there were 4 40-point winning trades. That's 3 40-point winning trades. That's 3 $800 winning trades AbleTrend gave to me, you, anybody who uses it and follows the rules and just is disciplined. Again, if you didn't get in on the beginning of the trend, that's fine. Get in on the sweet spots. You got the 3-minute, 9-minute saying to go long, short. You got the 15-minute going to short. When everything is telling you to go short, just go with the signal. Michael Z said he grabbed 100 points on one trade. Wow. I love hearing that. Good job. You got stop trading after that. Totally agree. You've got 100 points profit at $20 a point. That's $2,000. Hey, you know, I don't care if it goes down 1,000,000 points. I'd be super happy with that. And you don't want to risk giving that back. Totally agree. You got that kind of profit, 100 points. Totally agree. Yes, sir. Mike Z says, I've been doing what you said. When I see the 15-minute have a strong trend, I put limit orders at the 3 or 9-minute levels with a 10-point maximum risk. That's exactly what I was just saying. So what Michael's saying is he is using the 3-9, just exactly what I just finished explaining. Pretty cool that he said that. So Michael's putting orders in, mid orders in at the red dots. Being that the 15-minute is clearly a downtrend. He's putting limited order right at the red dots here and picking up some big trends. Good job, my friend. Chatting for RTY, I was using the 55-125. The reason I was using such a fast time frame because there's not a lot of contracts traded, as many traded in Russell as it is in NQ or ES. But the tick chart is only for sweet spots. The 15-minute is the 3-minute, 9-minute, and the 1-minute, 3-minute other keys there. You're welcome, John G. And you're welcome, James. I think I got to everybody's question. Cool. Good. All right. All right. Well, thanks for being here, everyone. I hope I was helpful for you. Have a good night. And of course, stay safe.